Okay, that's a good way to start by yawning. Okay, guys, welcome back welcome to 2016. Uh, Today, again, it's just going to be swing high, swing low. This is going to be a review for most people. We're going to look at it in reference to dealing with like confluence levels, and basically what I want to really drill in today is being identify what I would call a warning candle. If you're a reversal trader, you really want to be able to identify a warning candle, which means that there's a potential for a run to happen. Whether it's a small run or a big run, which on this chart we're going to be able to look at a small run and a big run. We want to be able to identify them. A lot of times, if you can identify them or just pass on the trades you're not sure of, it'll bring your ITM percentage up by, I'd say, a 3 to 5%. Some people even more. But we need to first be able to identify that warning candle. Um, Is anyone not have a clue on swing high, swing low? I'm going to still cover the basics of it, but is there any brand new people in the room that have never heard of it? Completely lost. A swing high, swing low is just basically a higher high or a higher low. So it's nothing fancy, it's just a different term for it, I guess you could say. Sorry, I'm itching. Okay, so let's start off with, let's see if we can find a simple one. Okay, so if you'll notice, I have different colored lines on the charts. These are red and blue. A red is a new swing high, and a blue is a swing low. It's nothing complicated. These are drawn by fractals. Believe the one I'm using, this is a multi-time frame fractal, so it does draw several different periods. That's why you'll see like a dot here, where there's nothing to it. I have these on here. I actually use them a little bit with Forex trading, but I have them on here today just so you can basically see, I guess, how I picture it in my mind. The multi-time frames isn't exactly how I picture it, but it's probably about the best. So if we want to look, we're going to concentrate on this area right here, and I will turn off the auto scroll so we can take a look at it. And scroll the chart to the end of a tick incoming. We don't want that. We do want shift. Okay, so we're going to zoom in one so you can see it a little bit bigger. So this is the area that I was talking about. We're going to start off with basics. If we have, this is a higher high, and this is a lower low, or a swing low. So if we have a swing high, and a swing low, the first thing it can tell you is it can help you identify trend a little bit. Here's our swing high, and here's our swing high, but it's below this one. So our next swing high that we see forming is here, and our next swing high we see is forming is here. So if you had to guess in general, we would guess that we're in a slightly downwards trend. Now here is our swing low. Here's our swing low, which is lower, but this is where some people get a little confused. It jumps back up to here. So our swing low isn't quite exactly playing as long as nice as our swing highs. But let's take a look at it half and half. We still have our swing highs showing things dropping. And this was just a retrace up, so we have a swing low, and then again our swing low gets lower, gets a little bit higher, but our swing highs still aren't altering. They're not getting any higher. Let's scroll along just a little bit. So what we would consider this, if you could say, if the swing highs and the swing lows aren't quite in not confluence, if they're not working together, if they're not matching up, then what most likely you're in is some sort of consolidation, which means you're probably pretty good to trade like an overbought, oversold system. So any questions on swing high, swing low with showing the trend? This right here, as we can see, this is what we're looking at. Here's our swing high, a lower swing high, a lower swing high, lower swing high, and lower swing high. Our swing lows aren't quite adding that up, but since these aren't adding up, but these are, in my opinion, I would be looking more as this is downward moving. What it happens to be is consolidation off this move. Let's zoom out one. So this is what we're looking at right here. So it was a consolidation period because this was not matching up with this. So that's kind of an easy way if you're not good with the trend, or if when you're wondering is consolidation starting. A good way to see that consolidation starting is your swing highs or your swing lows are matching up, but the other side of it, the flip side of the coin, is not matching up. Because if we look through here, our swing highs are dropping and our swing lows are dropping. And until we get to here, then all of a sudden we start getting a swing high, then a swing low that doesn't quite match, but then it matches, then it doesn't match. So can you kind of see that pattern? It's a different way of looking at it, but it's pretty simple. Basically, you want, if you're in a trend, you want swing highs and swing lows to be cooperating. When they're not, you're most likely in consolidation. A lot of people have asked me how to tell when that's starting. It takes a little bit of practice, but you get a feel for it. So hopefully that helps a little bit. Most of this webinar is going over requests. So if I jump a little bit around, I'm trying to cover all the requests I had. So the next thing we'd want to look at, let's jump to Euro because it is a pretty good example. We're going to start talking about identifying warning candles. Now, when you're in, like right here, we have our swing highs and swing lows. So we had a little bit of consolidation in this area. The area that I'm looking at was consolidation here. So this is a little bit of a consolidation because swing highs and swing lows were not making sense together. Let me go back to the template because I don't feel like dicking with getting that off there. So as we get this, here's our swing high. It comes up. It set a new high. Let me zoom back just a tiny bit. And I'm going to mark a couple things and we'll come back and look at it. Drawing tools. God, am I this out of practice? I'm going to use a... Let's see. Yeah, let's use the price label. That might work. I'm going to mark a couple things, and then we're going to come back and talk about them. Price moves up, doesn't break, comes down, and breaks. Okay, so we're going to have 4 points to talk about on this chart. And remember, right now what we're going to be looking to do is identify a warning candle. Okay, so on the opposite end of this, we're going to come as price is forming. And I already marked it, so that's kind of cheating, but oh well, because y'all can see it. Okay, so the first one we have, what we're looking for as a warning candle is when price closes higher or lower than a previous swing high or swing low or higher high or lower low. That's your first indication we might have and I'm going to keep this simple because a couple people that requested this are brand new. That's the first indication we might have forming what's called a breakout. I'm not going to look at Bollinger Bands or anything else on this. So let me take them off. Because Bollinger Bands are another way. Yeah, I get some questions through Skype and some through this room. Bollinger Bands are another way to identify, but today we're going to be focusing just on swing high, swing low. So, yes, it's great you know it, but I don't want to confuse the newer guys. Okay, so the first thing we have is this candle right here. If we look back, now this one would be more for me like an ambiguous, yeah, I can speak English. Now, there's two reasons I would take a look at this one. One, here's a previous swing high, but the price action or the formation of this is kind of shit. Yeah, let me just say it. So right here, what I'm looking at is this line and this line is where I really would want to see it breach above. So overbought, oversold here. Would I take a trade on this? A reversal trade? No. Would I take a trend trade with it either? No. Reason being is, here's our swing high, and here's our swing high. They're almost lining up, so that's a decent area. This indicator draws it here. Just because it breached these highs, it's really not breaching a swing high. This is just a messy little area. So if I would want to look at it, some people might consider this one, but I would actually skip that one. This would be a candle where I would sit and wait. It wouldn't be a warning candle for me, but it's just a sit and watch candle. Now the first warning candle I have is this one right here. This is a really, really, really obvious one too, so this makes it kind of easy to show. Why is this a warning candle that price is probably going to shoot up is because here's our previous swing high and a previous swing high. Remember, these are both kind of matching up if you want to look at it, but not perfect, so it's not drawing them together. My point is here, what I'm looking at actually, now these lines are a nice clue, but what I'm actually looking at is the close here. My swing high, swing low, I really don't care about these upper portions. I'm looking to see that it closed above this previous high here, and this was the close of the candle. Now, if we go back to it, this candle actually was our warning candle because it barely breached it. Let me zoom in a little bit so you can see it a little closer. Okay, so here was our swing high and our close. And this is the same chart. I just zoomed in a little bit. And here was another swing high, slightly lower. This candle actually did close slightly above our previous swing high. So it would be a slight warning candle, but for me, it's a sit and wait. It just isn't clear enough. I prefer it to close a little bit above it, at least a pip or two. So if I would have sat and wait, the next one would have shot up. So I would have been good to sit and wait either way. But the most important thing is here, I would not take a trade on this because it was not a clear signal one way or the other. It's just kind of a crap signal. We don't get the information we need out of that. It's not clear enough for us to make a decision. All we know is that it barely closed higher, and it's just not clear enough. Now, the next candle definitely gives us our information. It closed way higher, so we know we're going to sit out. Or, if we have room, and I'll talk about that in a bit, we could actually set up a trade with the trend. This is where I would not do a binary options trade, but I would take a Forex trade if it had room to run. And when I say if it had room to run, we're going to look at confluence here in a second. I'm not used to talking anymore. Let me get a drink. I got used to screaming this whole time because of my daughter. Okay, so before I move on, do we see where this was our actual warning candle, but it just wasn't a clear enough signal to make a decision off of. So if you're trading bins where your ITM percentage needs to be above 60 and more around 65%, how this would be a good time to just sit and wait and pass. Because let's say you did decide to take a reversal off this, you would have lost your ass. But if you were cautious and said, that's just not a clear enough signal of what's going on. Later this week, I am going to show when we get into trades again. I'm going to be reviewing that too. I'm starting off from scratch in January. So for the guys in my room, we're going to be starting off from scratch. But right now I'm focusing on what not to take. The reason I'm doing this today is because the markets are going to be kind of funky. And we're going to see a lot of breakouts. So I'd rather y'all be able to start identifying breakouts. And then probably Wednesday we'll take a look at what to take. God, I'm just retarded talking today. Or maybe even tomorrow, depending. Everyone understand, though, why this was a warning candle? Even though it was not the greatest warning candle in the world, it was a warning candle that we had a possible run forming. Okay, so we're going to move along. Price is moving, price is moving. This right here, let's see if we can find anything. Here's our previous swing low. We have some forming, but for me, I'm not looking for anything until price comes down to here, or actually in my case, until price comes down to this range. So let's keep going. Now, a little hint for later on this week. So here's an overbought, oversold with a confirm on it. And it is, let me mark it with a horizontal. So it's this candle here. I know that's going to kind of block everything. But what did this candle do? And this is just a little hint for Tuesday or Wednesday. It went overbought, oversold. We don't know if it has confluence on it now. But did it create a new swing high or swing low? It did not. So just so we can see the kind of think about it. No swing high, swing low is even breached, created, or even touched, but we went overbought, oversold. So what's most likely going to happen? Price is going to give us a nice reversal. Now we combine that with confluence for you TA guys, and then we might have had a nice little setup there. Let me remove it so you can see. But look what we get. I'm talking about close. Here's the candle actually did move up to here, but it dropped back down. So the close of this was nowhere near over here. Or swing high, swing low. The body of the candle, if we want to look at it, and this is what I'm going to have to get into a little bit more. This is another ambiguous one where it's slightly above the close of this, but I'll try and get into the difference and this in a little bit in Tuesday or Wednesday. So if we keep going, now what we're getting the whole time we're doing this is lower and lower swing lows. What I'm focusing on is an overbought, oversold swing low. So we have here, we have all our swing lows here. So here's our candle, previous here. It's not overbought, oversold. This is our first overbought, oversold. Good Lord. Right here. Now again, what do we get out of this is not a lot of these are very clear, but that's good. I mean, if you see the easy ones all the time, it doesn't really help you learn. So let's scroll back a little bit. Now, what's hard to teach about swing high and swing low is, for me, what I see is a good swing high, swing low, because I don't see this as a great one, but I do see right here as a solid swing high, swing low. I also see right here is a good one, these two candles, and even if you want to say it, these two. What I'm looking for is a swing high, swing low is when it goes down, up, down, up. We're looking for a zigzag pattern. So I see these all as decent swing high, swing lows. I marked this one, so if we look back at it, here was our swing high, swing low, the one that I'm considering it. Remember, these lines are just there as a guideline to help you identify them. They're not to live by, die by. Fractals give you the same thing. I just happen to be using a multi-time frame fractal one, and that's what we're looking at. So if we look at these and we go over, this one did drop way below it, and it closed below here. So the body of the candle closed below the body of these candles. Remember, wicks we give two shits about. Hell, to make that easier, let's do this. Line. Bar up, bar down, bull, bear. Skip it. I was going to make the wicks go away, but I'll do that for next time. That might help. We can look at wickless candles. It's just, they don't help. I'll skip it. That's not here nor there then. Okay, so our warning candle was this one again. This was our warning candle because swing high, swing low, and it closed below. The body of this candle closed below the body of these candles. What would we expect out of them is a downward run. Let me get rid of this line. That's old news. So, again, any questions on this being a warning candle? What's the warning candle good for? You can take a small trade downwards then in Forex. We're only on the 5-minute chart, so I wouldn't expect that big of a run down, but sometimes you get them, sometimes you don't. So by the close of this candle down to here, it was 10.7 pips. For me, that's by the spread. What is the spread? 1. That would have almost 0. I might have been able to close out a 10-pip trade, which on the 5-minute charts, what I shoot for is 10 pips. I'm going to keep going. Okay, so we're getting it here again. So let's identify the swing highs. I know we have the lines here, but which ones are we looking at as swing high and swing low? Here's one. Price moves up and then down. So we have a baby one here. This one not so much and not very good. And we definitely have one here. Let me mark the one that's not so much and not so good so you can see what I'm thinking about. This one here is not too concerned about this one. I am concerned about this one, and then price moves down to here. So we actually had a warning candle here and here. First one was here. Price moves here, and let's draw the line so we can see exactly what went on. I'm going to draw it at the close of these. Come on, you little bastard. Okay, so we know here, so this is our swing high, swing low that we want to pay attention to when price comes down. And this is where we're going to get into where sometimes it works, sometimes it doesn't, but it is better, in my opinion, to just sit your ass out. Okay, so this is the one we're going to be focusing on. Let's get rid of this, and we'll take a look at it, because this is another one. Like I said, these aren't always going to be perfect, and honestly, it's better to look at the ones that are trickier than it is the ones that are easy all day long. So let's talk about each candle as we have it coming down. This candle here closes. We go into overbought, oversold here. So this is our first overbought, oversold candle. Right here. Let me move it. So if you're a reversal trader and you're not focusing on much else other than overbought, oversold, you could take it here and you're going to get a little bit of a pullback. For me, I'm not even going to get into the baby one here. All I'm going to look at is me. I would have ignored here. I would have ignored here. This would have been when I first started looking, because we had price closing in on this swing low. Up in here, I don't see too much of a distinctive pattern, so I'm ignoring it. So this one is overbought, oversold. We'd have to look over at Confluence. Confluence is here, and I'll get into that in a minute. Then this one here would have been sit and wait still, because it didn't touch or anything. It's still not creating a new swing high, swing low. I'd have to look at Confluence, so let me mark it as... I wish I had more symbols. I'm used to C-Trader. I would have to look and see what was to my right on Confluence. I couldn't make a decision from this right here. The next candle does drop, and it's still overbought, oversold. And then we get a small reversal out. So the candles we'd want to look at on this one, and we're going to take a look at them the way we normally would now with Confluence. This one here, for me, would have been a warning that it's going to drop. So unless there's a shit ton of Confluence about to show up on the right, I would have most likely passed on this one. And even though that would have been slightly winning trade, I would have passed here. So I'm not going to lie and say, yep, I can see it's green the next candle, and I would have taken it. It all depends what we see to the right. There's still a chance I say I might take that. But let's zoom out one. Okay, so this is the one we're focusing on. Would we have taken this candle? Because this one we would not have, and this one we possibly might have. What am I talking about a Confluence over here? So here's our swing high, swing low. If we look to the right, it was overbought, oversold. We had a big round number, a daily 561.8. So I'm not going to get into current market conditions, but we had two institutional. For me, this probably still would have been a pass, and I would have missed out on the trade. Depending what the current market conditions looked like Bollinger Bands, we might have taken it. But this is where it gets a little bit tricky, and sometimes it's better just to sit it out and say, you know what, fuck it, I don't want to take the chance. A lot of y'all get excited when you see a trade form. It's overbought, oversold, it hits a level. So we have institutional here. Remember, we can't use the Fibos. If some of y'all are in my group, you know what I'm talking about. These boxes here are Fibos. We can't take those into account because those were for the last hour, so they don't fit into it and helping us with current market conditions. When I'm done with this one, we are going to take a look at a couple charts live and see what we can see. But this one, for me, some people may have taken it, some people might not have. I'm very conservative, so this would have been a pass for me. Let's come back down again. Price moved up, moved down. Again, we have this swing high, swing low, and another price closes below it. So we get a warning sign. We have the higher highs. What are they doing? Here's one, moving down. Here's two. Here's the third one that would have formed by the time this candle was here. We can see that a downwards trend was starting to form. Lower low. This lower low would have 1, 2, 3. Yes, it would have been here. So we would have had two lower lows and two higher highs. And then we would have had a warning candle. Now, does that make sense for y'all right there? Because that's pretty much showing that consolidation's starting to break and a trend is starting to form. We still can't see it clearly because, to be quite honest, all you could see on this when it happened would have been, or let's just watch it form. So we would have been watching the chart form. There's our lower low that forms, and then our higher high forms. we're still in consolidation from here. We don't know we're out of the consolidation yet because here's a lower low and then we get it higher. Here's a higher high and we get it lower. So we still have higher highs forming lower, but our lower, man, this is fucking getting hard to talk. Okay, our lower lows are not, they're not, what is it from that movie? Simbi, whatever. But they're not conforming to the higher highs. So that's a little bit of a warning that we're probably still in consolidation. But what happens is things start falling into line. This higher high and lower low, then we get a higher high that's lower and a lower low that's lower. God, this is a mouthful. And then as it forms, we get one more lower low. But things are lining up correctly then. So we can potentially say that, yes, a trend is forming. Does that make sense? I know that was a mouthful of higher highs and lower lows. But do you see what I mean? Where basically look at it at two sides of a coin. If the higher highs are going down, then that says we have a downwards trend forming. If our lower lows are going down but they're all over the place, then we might have either a weak trend down or consolidation. If these are all lining up though, like higher, lower, higher is lower than this one, lower is lower with this one, then things are starting to line up that we can see a trend. If you're using Ichi, most likely you're seeing momentum building. But these are your warning signs to watch out for. Then we get that breach finally right here, and price does drop. So, hopefully, for today, hopefully that clears a few things up from the requests I had over the holidays. Let's go ahead and pause then, and do we have questions while I look through a couple of the charts? I'm going to look for current ones. Nothing special. Real quick, I'm just going to go over these real quick so I can point it out. Here's a higher. Higher moves lower. Higher moves lower. Okay, so we might possibly have a downwards trend. Let's look at the other side of the coin. Here's a lower. And we'll ignore this one because this is coming off the trend. So here we go. Here's this. Now we have a lower. The lower moves higher. The lower moves higher. And then we have lower moves lower. Lower moves lower. Things start getting into line here. Yeah, I'm it's hard to talk about this just because the freaking terminology. When you're saying higher high and lower low, and then you're trying to say this higher high went lower than low, it gets confusing. So if you're not catching it, don't worry about it. I'm recording this. You can go back and review it. Basically, I guess what to focus on is if you're doing reversal trading, you don't want both sides of the coin to match. You want you want something to be skewed, and if both of them are skewed, that's fucking awesome. You're definitely in a range. If one side of the coin is going like here, so we have higher moves lower, higher moves lower, and I'm looking at the red lines. So let's say let's say these are lining up. So one side of the coin's lining up in a downwards trend. Now, possibly if we looked at the higher time frame, it might be. But if you're on the 5-minute time frame, you need to look for signs of what's going on. So we look at our lower lows, and this is a lower moves higher, our lower moves higher, and our lower moves higher. So it's not matching these. So then that would most likely be a good time to range trade. How do you know? With the combination of a warning candle breaking out. So this is our warning candle. We already have the higher moving lower. Okay, so I'm going to try and explain this in a different way. We have the red lines moving lower. The blue lines are now starting to move lower also together. So both sides of our coin are starting to match up as we get a warning candle, which should tell us that we are starting to move into an actual downwards trend. When both sides of the coins don't match, then we're either in a weak trend or we're in consolidation. As soon as they stop matching, you can start looking for consolidation. So let's zoom in on this one real quick. So we had higher, high. Okay, high went lower. Think of it as steps. If you're looking at steps, the steps have to be symmetrical. The top of the step and the bottom of the step both have to move lower together, or they both have to move higher together. If you're going up the steps for a trend, you want them like that. If your steps are not symmetrical, something's wrong. If you think of it as steps and then they put the bottoms and the tops lower, you'd probably have some fucked up steps that are more in a wavy pattern, which is what you get on the market. So as we see here, the market started coming down. So the top of our step is going lower, the top of our step's going lower, top of our step is going lower, and the top of our step is going lower. Let's look at the bottom of our steps. They were a mess until here. So now we know we're getting into a trend. The bottom of our step is matching the top. Bottom of our step is matching the top. And let's go down here. Bottom of our step is matching the top anymore. No, it's starting to... Yes, it is for a little bit, but it's starting to even off. But you can see consolidations forming. Hopefully that, if you're not understanding higher high or lower low or flip side of the coins, think of them as steps. You want them to match because that'll give you a clearer picture of whether you're in a trend, consolidation, an upwards, downwards trend. Does that make a little bit of sense too? I'm trying to explain it different ways so people can understand it, because I know the first time when I heard higher high and lower low, I was just like, what the fuck is this guy talking about? Because it gets confusing. This one's another good example of it. You see how the bottom of our steps and the top of our steps in this case are completely out of whack. They're not matching. So we have consolidation. As it's moving down though, here's the top of our steps. Well, 1, 2, 3, and then it drops out of the floor. 1, 2, and then 3. They match up. It's pretty easy to see. Then we know we have consolidation. You'll get the hang of it the more you think of it. Honestly, think of it, I guess steps is a good way of explaining it, is think of it as steps, and if they're matching up, you know that you're getting into a trend, and when they start not matching, you know you're getting into consolidation. Cable's another good... Cable's a mess, but if we look at it, here's our steps moving down. Our steps are moving down. As soon as they start not cooperating, then we would be looking for a break. But right now I'm still seeing a downwards trend. How can we see that? Here's the top of our steps moving down. And here's the bottom of our steps. They're still moving down. Even though this isn't the best price action in the world, we still know that this isn't a downwards trend. Okay, so that pretty much sums it up for today, guys. Warning candles, again, do we have questions on what a warning candle is? Higher high, higher low. Another word for higher high or higher low is swing high, swing low. And the last thing that we wanted to look at is how these form. Are they... We'll cover all the ways I talked about it. Is the higher high forming a new higher high or a new higher low? See, that's where it gets confusing, so let's go to the simple one. Are the sides of our coins matching up, or are stairs forming? Do our top and bottom stairs match? And I don't mean the top and bottom stairs. I mean the tops and bottoms of one single stair. If you picture it as a stair, that might help you a bit, because you want to see stairs forming with the higher highs and lower lows. Once I'm done with this, I'm going to stop the recording and take a little bit of a break. I gotta go blow my nose. I'm going to see if I can find my coffee, so I still will be here. But this is just to wrap up the recording. Any other questions or anything? Like I said, if not, don't worry about it. I'll still be here for about another... probably another hour. I'm going to take a short day today, because I need to actually get some work... not work done on work. I need to get my office clean. I had my daughter here for the whole... My daughter just trashed everything over the Christmas holiday since I didn't have a nanny. Okay, so let's kill the recording.